Good morning everybody and welcome to this week's Motor Trade Radio podcast in association with eBay Motors Group. It is Saturday the 12th of September and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. So we're on episode 379. Today we really have got all the chatter that matters because it's been an incredibly busy week for the sector.
I think it's been an incredibly busy week for us as well with another midweek interview that we've had as well, Curtis.
Yes, indeed. Mike Allen from Zeus Capital, which will run at the end of this podcast, so do stay tuned for that. But we invited Mike on because it's obviously very timely at the moment because we've had all the trading updates and interims from the major groups. So we thought, well, let's get Mike on to give a bit of analysis on what he sees as the main trends. So I thought it was very revealing.
Yeah, no, you're right. I mean, we're talking about that, the 70 plate, we're now partway through the month of September. It touches on sort of that consolidation, and we address the topic of agency modelling that we chatted to Louise Wallace from the NFDA on the week before, and then it gives us a view on sort of what to expect in the fourth quarter and into 2021, which is I think anybody doing that at the minute, it's best guess in some ways, but there's certainly a lot going on, and certainly in Mike's world as well. I think there'll be a lot of questions as to what to expect in the months and years ahead following the what we've just been through.
Yeah, absolutely right. So this week in the headlines, we've got an acquisition. We've got a roundup of August's new car registrations, which were actually published just after we recorded last week. So we'll do a quick roundup of that. We've got some interesting stats from eBay Motor Group on used stocking, days to sell and demand in August. We name the most searched used car brand in August, so plenty to catch up on with August. And it's a name that you wouldn't necessarily associate with used cars, so we'll get to that in a minute. We've got some interesting senior and strategic appointments at Marshall's, why prices of used vans are stratospherically high at the moment, and finally the latest addition to your Uber app.
So there is, as you say, there's lots to talk about, but we are starting this week with an acquisition, and this kind of follows on the previous story that we talked about Inchcape. Selling some of their dealerships and obviously reducing their representation within the UK retail sector. But this is an acquisition from Swansway Garages, who have acquired the VW dealership over in Oldham, and this is I believe that they are buying the current operation, but that is on a rental basis currently, and whilst they do build a new site over in Oldham that they've got the land for.
Yeah, you're right. It's a 2.5 acre site with planning consent for a new dealership. So that's obviously the key to this deal. So the acquisition takes Swansway's representation with VW up to 3 sites because they already represent the brand in Crewe and Wrexham. And as you say, it's all part of Inchcape reshuffling its pack, and we covered the disposal of a site in Tenbury Wells. I think it was. Only just a couple of months ago. And that was a BMW and Mini site. And interesting in this story, Inchcape do actually confirm their long-term commitment to Volkswagen. They describe VW as being a key partner, especially in the Greater Manchester area where it has strong representation with the brand.
Yeah, and I mean, it is interesting. They say that Swansway are adding this to already some dealerships that they have got, but they do point out that they've always had a VW representation since they were founded back in 2003. So you feel that there's a a building of a partnership there now on its way there with Swansway, and maybe we'll see more from Swansway with the VAG brand, which others have been moving. But I think, as you say, I think this partnership alliance is very evident now with some of these more recent acquisitions and moves that we've seen across the sector, haven't we?
Yeah, and I've got a quick correction to make. It was Tunbridge Wells, not Tenbury Wells.
Is that a different place entirely?
Yeah. I used to live in Tenbury Wells. It's in the middle of nowhere in Shropshire, and it's not really big enough to have a dealership. So apologies there. It was Tunbridge Wells in Kent.
So I think you're right. I mean, but talking about the Inchcape, because the story does cover the previous interview, as you say, with James Brearley from Inchcape, and what's been happening, and some of the recent disposals of some of their businesses in the UK, and talks about their financial results that were back in February, about the 2019 annual financial results that revealed about the UK and Europe retail operations, that they did see a decline of 1.6% year on year to 3 billion. So a lot going on within that Inchcape business, but probably not on their own these days, is there? I think there is a lot going on generally with many of the AM100 operators.
Yeah, definitely, and it's probably just worth adding that Inchcape sold 2 VW sites in West London to Citygate. That was 8 months ago, so that was turn of the year, and 12 months ago, or no, July last year, it sold 7 VW sites to Group 1 and Motorline. So, it's sort of indicative of some of the thinking there, although, as I said before, they're certainly, making a bigger show in Greater Manchester area. That seems to be a key focus for Inchcape.
Yeah, definitely. So, moving on to the next story, and like I say, they were a little bit late on this because the figures came out after we did record last week, but this is the story in AM, so we're staying with AM from Mike Hawes from the SMMT, talking about the August results that we saw that dropped 5.8% in August. But I think we sort of touched on it, I think, a couple of times on the podcast, that putting it into context, that the August figures for 2019 and 2018 were inflated due to WLTP and RDE. So I think a 5.8% decline is still a positive result for the sector. I think it is still above the average for an August performance, removing the 2018 and 2019 figures. But again, they're talking a lot of questions now around that fleet and business sector, and in particular the EV market in there that has been highlighted from the results of August.
Yeah, there's actually some interesting EV stats within the August figures. So let me just so sales of battery electric vehicles were up 77.6%, and plug-in hybrid electric vehicles were up 221%. So this means, and this is a stat that's been pulled out by the SMMT and got quite a bit of coverage in the press, that sales of zero-emission capable cars, and the key word there is capable, actually grew by 110%, so more than doubled for the month, and accounted for 1 in 10 of all new car registrations for August. And also, looking at the stats, what caught my eye was that registrations of battery electric vehicles, so that's 5,589, were actually greater than hybrid electric vehicles at 5,542. Now, I don't know if that's the first time that's happened. No doubt with your total recall of stats, you'll be able to correct me. But that is notable, I think.
It is, and I think generally, the whole it's quite interesting, because now you look at that EV market in the new and what's happening, and there's reports around the challenges of supply. There's reports that some of the the battery providers haven't got enough batteries for the factories for some of the OEMs to produce the models that they've got in the market at the minute across Europe and UK and the international markets. But we talked recently, didn't we, with Louise and the Saturday headlines before about the Green King investment in that EV infrastructure. There's a lot of conversations this week around the used car values and demand for EV vehicles, and quite interesting really, because one of the conversations this week around EV has been that in the wholesale market, in the used vehicle market, we're obviously seeing a very strong performance overall for used cars at the minute in the used car market, both in retail and wholesale. But EV and hybrid has started to weaken, and the indications are that that's due to consumers at the minute moving away from focusing on the green agenda and just focusing on getting a car, and less on whether it is a EV, hybrid, a petrol or a diesel. So quite an interesting dynamic that's starting to appear from the COVID-19 impact on the sector. So one that we'll keep an eye on, because we've seen EV at its bottom levels in terms of values, recovered quite quickly, and very much reliance on that future RV of EV vehicles. So one that we'll keep an eye on.
Yeah, and briefly before we leave the new car stats, as you know, I like to run a highlighter over the ups and downs. Now, I won't give you the downs, but interestingly, in year to date, registrations are down 40%, and there's only one brand that actually improved year on year. So one brand in over 20, and that was MG, who were up 32.28% year on year.
Yeah, and I mean, September is key. We talked about it with a number of our interviewees on the recent podcasts about the reliance on the performance in September. As we're recording the podcast, early indications are that September is circa 10% up on where it was at this point last year. But then when you start to look at some of the OEMs, the brands within that performance, again, some winners and some losers, and significant winners and some losers at this early stage in the month. But a lot to play out, because I think looking at some of the supply constraints, what we've obviously, the challenges coming out of lockdown, the logistic challenges and production challenges that the OEMs have faced. I suspect that when we talk about the order banks that we talked with Mike Allen about on the interview at the end of this podcast, that I suspect it's going to be very back-end loaded this month for September. I think there's a lot of cars that are on the way that many retailers will hope will land in time for September. So I do suspect that September will be very much back-end loaded now for its performance. So one that will be keeping an eye on. But again, the fact that it's 10% up in the first sort of 9-10 days of trading is a positive. And I suspect that will continue throughout the month.
And you know what? Anecdotally, I was on the road last week, the M3 down to Bournemouth, and I saw a lot of 70 plate cars. I was actually sadly looking out for any 70 plates with a green stripe on them, because that's the story we covered last week about all new EVs, yes, pure EVs having a green stripe. Didn't see any, but I saw a lot of premium German brand cars with 70 plates on. So that was very encouraging.
It's nice to know you've been out as well. I think,
Well, a day down to the seaside. So yeah.
So moving on to the next story, we're going over to Motor Trader, and this is the performance from eBay Motors Group, and the used car sell faster in August as averages hit 57.8 days. And you've got some stats and some results on this, I think, haven't you?
Yeah, so that figure, the average of 57.8 days, that's actually down 8 days. So average days in stock down 8 days. Year on year to 57.8. So sorry, not year on year. That's month on month, because that's the key comparison at the moment as dealers come out of lockdown. So that's just showing how faster vehicles are moving at the moment. And there's some encouraging stats in here. Buyer inquiries, for instance, were up 155%. That's compared to the low point of the lockdown. So plenty of inquiries coming into dealerships, and average stock levels remain pretty much on a par with July, because obviously we're hearing a lot about supply and demand in the wholesale sector. So stock levels averaged across franchise, independent and supermarkets averaged 46.5 days.
Yeah, and I think it's what is interesting at the minute is there's a lot of, I don't know what your feeling is, but conversations I'm having and calls I'm on, and there is just positive news at the minute, with the results coming out from June, July, August in terms of dealer profitability, order take, the stats that are being seen from the supply and demand strength in the market at the minute. We're seeing it through our auctions, both through the Mannheim and the dealer auction world, around the performance of conversions and valuations. And when we interview, it'd be great to have Darren Martin back on as well at some point, and thinking as we're getting towards the end of September, and because everybody's been talking about this, the pressure coming in the fourth quarter, but there's no sign of it yet coming, is there? Nobody's really talking down that fourth quarter yet, because everybody's just maximising on the good news that is in the minute, and reiterated with some of these days to sell, turning cars quicker, and hopefully with more margin as well.
Yeah, and there's a comment from Dermot Kelleher, head of marketing at eBay Motors Group, saying it is immensely encouraging to see month-on-month improvements in days to sell in August, with dealers benefiting from pent-up consumer demand. So, as you say, that is looking strong, and let's hope that does go into Q4.
Exactly. And we're now heading over to Car Dealer Mag, and this is a story that probably nobody would probably guess before reading the story, in fairness, but the fastest growing brand for used car searches in August, and this is based on research by Honcho, was the Tesla. So do you want to tell us a little bit more about this story, Curtis? Because, that is not you wouldn't expect that, would you, in fairness? If you were talking 6, 12 months ago, you would not expect Tesla to be the fastest growing brand from a search activity perspective.
No, you're right. It's an interesting piece of research here from Honcho, and I worked with the guys to produce this research. What they did was they looked at searches, Google searches, according to car brands. So anyone looking for a used car in August and starting with a search term like used Tesla, used Ford, whatever. And Tesla was the most searched for term, which, as you say, is quite extraordinary, because it's not a brand that's been around long enough for us to even consider as being a used car brand. But of course, used volumes are coming through onto the market now, albeit in sort of fairly limited numbers. But it is interesting, this, and I'm wondering if it's just people thinking electric. They're in the process of buying a used car, and maybe they're thinking, maybe I'll look at see what's available in the electric market. And of course, Tesla being an electric only brand, maybe that's the first port of call. So,
and actually, you mentioned them before, but Tesla was followed by MG, who were up 74% as well, and Porsche up 17%. So, again, MG up there as one of the brands that people are now searching for.
Yes, and it is interesting because with MG, there are brands that were very quiet for a long time, but we seem to be mentioning them on a more regular basis, and that they are having a particularly strong year in new car sales, as we talked about in the last story, but also emerging as a used car brand. And in terms of what were the top 5 used car searches by brand in August, I'll do it in reverse order. So we've got number 5 Nissan, number 4 Mercedes, third position was Ford, and the top 2, number 2 Audi, and top of the pile BMWs. Particularly strong result there for the German premium brands, because you've got BMW, Audi, and Mercedes all in the top 5.
Yeah, and I mean Tesla's been in the news recently. I mean they've always in the news somewhere or the other, aren't they? Whether it's over the anything that Ellen's up to himself, and I think he's been in the news this week that he's been tied up with something to do with VW as well, in terms of conversations with VW has hit the headlines. And more recently, the stock shares are always in discussion, and many people wish they'd bought some of the stock shares right at the start of Tesla floating. But there's been some conversations taking place, I think, this week, where Tesla shares have been under a little bit of pressure. But I mean, it's great that Tesla now are being talked around for the used car, because again, like you say, Curtis, it wasn't they've never really been talked about as a used car proposition, but now, years on, they are in that used car market space. So one that I'm sure we'll be adding to some more of our top and bottom 10 stats as we talk about them.
So you're listening to the Motor Trade Radio podcast in association with eBay Motors Group, the only weekly podcast serving the car retailing sector, and available by subscribing on Apple Podcasts, Google Podcasts, Spotify, Deezer, and SoundCloud.
So remaining with Car Dealer Mag, and we do mention this on the interview again with Mike Allen from Zeus Capital, but some moves here from Marshall Motor Group, and the header is that they put a stake in the ground for growth, as it signs top execs from rivals both Virtue and Endeavour, and 4 key moves there in terms of those appointments, haven't they? And like I say, we do talk to Mike Allen about this, but again, this kind of shows their intention for growth in the market.
Yeah, they're fascinating appointments. So if I start with the 2 that are alluded to in the headline, Adrian Wallington, who is actually rejoining Marshalls from Endeavour as commercial development director. So there's a key appointment there. And the other appointment is Simon Elliott, who joins as director of commercial vehicles. And the car dealers say he was pinched from listed dealer group rivals Virtue, which it was a position he held for a year or so. And I noticed, I know Simon from way back in my fleet days when he was at Toyota and I was editing Company Car magazine. And he's had a fascinating career, because he was head of fleet at Toyota, and after that he became managing director for Chrysler Jeep. And it was under Simon that Chrysler Jeep as a brand gathered quite a bit of momentum, and it was also on his watch that Dodge was reintroduced to the UK. And since then, Simon's held some senior positions in the UK, in China with Daimler. He's worked at Volkswagen as their head of commercials, and more recently, before Virtue, he was CEO of MAN Truck and Bus in the UK. So, Simon is an incredibly talented player, and his speciality now is very much in the van sector. And I thought this was a particularly interesting appointment, because it gives Marshalls more of a focus on commercial vehicles. They've now got a senior person whose brief is to push commercial vehicles forward.
Yeah, and that does lead us nicely into the next story, which is from the Times actually, and again, talking around valuations and things like this, it kind of reiterates with what's been talked about, that the white van man finds his time has come, and this is kind of talking around the what's happened since the pandemic lockdown, this move and growth of these home delivery vehicles, etc., and the online stores and things like this. That it kind of reinforces, particularly from my world, that the strength of LCVs at the minute. Whether those are Euro 5 or Euro 6, it's a very strong market, and we'll see the values for another week or two from CAP HPI, but the last couple of months have seen increases of I think it's 4 and 10% each month. So the market is very strong for LCVs at the minute, and really conversions and everything else are replicating that. So this is a very timely story, and like you say, you can see that with Marshalls, with the appointment of Simon Cartier's, to why it is such a strategic move for a business such as Marshalls to have a dedicated appointment at that senior level focused on the LCV commercial vehicle sector.
Yeah, and unfortunately, this story is behind the Times paywall, but we can give you all the facts that matter in the story. So, the research that they've done has shown that a 9-month-old Ford Transit recently sold at auction for £19,500. Well, fair enough, you might think, but that's actually £4,000 above its normal value. And it's kind of indicative of the level of demand for used vans at the moment. And they quote Andy Barrett, managing director of Ford of Britain, and he says the growth in home delivery is phenomenal. It's pulling in sales of new vehicles, but also used vehicles too, where we are selling used commercial vehicles through auctions. Prices are stratospherically high, and he goes on to say there is a second e-commerce boom. So very much driven, as you say, by home deliveries.
Yeah, and that's supported by comments in there from people like the DPD and Transport for London there about the acceleration that the pandemic has caused with seeing this pre-COVID growth. So again, sort of reiterating some of the strength that both the retailers and the vendors are seeing in the LCV market, and let's hope it does continue, because the market was on a year-on-year growth for used LCV transactions, and you can see this carrying on for some time and not slowing down anytime soon. So we'll keep an eye on. And actually that does lead nicely into our and finally, in a way, because this is heading over to Mail Online, and quite interestingly, those that do use Uber, you may notice some icon changes, as well as you being able to get your fast foods delivered, although they do keep telling me it's coming soon to my area. I don't know when it will, but not too concerned quite yet. But Uber launches UK car rental service, allowing customers to book and hire vehicles through the firm's app. And as always with the Mail, you get the whole story in just the title there. But
yes.
This is this is a change, and I think it's a fundamental change for the vehicle rental sector, isn't it? I think the fact that Uber are maximising that consumer interaction that they've got, their digital capabilities, and actually moving into that rental market rather than just the car hire, as in taxi market. So a very interesting move for Uber, this one, particularly in the UK.
It is, yeah, and it is something that had to happen. I checked out my Uber app, which in all honesty, I haven't used since before March. I can't think why, but I have got a new icon for rentals, but at the moment it's only bicycles and scooters. So the car hasn't appeared yet. So I'll keep an eye on that. But this is a collaboration with Car Trawler, who is not a company I'm familiar. I don't know if you've heard of them, Phil.
No.
So
there's many of them about now, I think. But
yeah. So it's a collaboration with Car Trawler, and Uber users will be able to book vehicles, the time, the date, and pick up from a Car Trawler location. So that's actually being rolled out now. So expect to see Uber, cars. I'm sure they'll be highlighting the fact that they're Uber rental cars, on a road near you sometime soon.
Yeah, definitely. So, I mean, that's it for this week. I mean, lots of stories there. I think you see the growth of the dealer market. There is still appetite for investment. There is appetite for growth, both what Swansway garages have demonstrated and Marshalls have demonstrated this week, and the interview with Mike obviously does talk a little bit into what the sector is doing at the minute, but very positive news coming out at the minute because of the whether it's pent up demand, whether it's revenge buying, whether it's driven by supply constraints. I think there is some good news across the dealer sector, particularly at the minute around the used car strength, and early indications September is looking as strong as long as those vehicles do arrive in time for the end of the month. But I know that the OEMs and the retailers are pushing extremely hard to maximise what is available. One, they need the new car registrations to recover the lost period of lockdown, but also it is the used cars that they desperately want from those consumers as well into those dealerships and through the wholesale market. So again, positive times for everybody, and I'm sure we'll continue for some time with some of these good news stories until we start to see what's around the corner.
That's all for this week. You've been listening to the Motor Trade Radio podcast, brought to you in association with eBay Motors Group. As Phil says, do stay here for our interview with Zeus Capital analyst Mike Allen. It is a wide-ranging chat that we have with Mike, and there is so much to talk about in terms of updates from the listed groups. And he talks about the possible strength of the 70 plate change, a look at industry consolidation, and whether or not it's actually going to be accelerated following the lockdown, which I know has been widely speculated. We also have his take on whether the agency model will return and his thoughts on Q4 and 2021. So do stay tuned for that. Join Philip and I again next weekend for more Chatter That Matters with our regular review of the headlines. Until then, it's goodbye from me.
And it's goodbye from him. Hello and welcome from me, Philip Nothard, and Curtis Hutchinson to this special Motor Trade Radio podcast brought to you in association with eBay Motors Group. Many thanks again for joining us in this 22nd in our series of special interviews themed around sharing best practices during these challenging times across the sector. Previous interviews with Sytner CEO Darren Edwards, Suzuki boss Dale White, Mitsubishi MD Rob Linley, and last week's chat with Louise Wallace from the NFDA, and many more are still available to stream online from Apple and Google Podcasts, Spotify, SoundCloud and Deezer.
Now, today we're delighted to welcome back to the podcast Mike Allen, Head of Research at Zeus Capital, the investment bank, where he closely monitors the PLC dealer groups. So welcome back to the podcast, Mike.
Hi, guys. Good to be back on. It's been a while, so looking forward to it.
Yeah, no, it's great to have you back, and it's also very timely because we've now got dealers out of lockdown. The 70 plate is on sale, and September appears to be shaping up to be a strong month. Now, we've also had the first wave of interims and trading statements from the listed groups, which have begun to shed some light on the impact that the lockdown had on bottom lines and also future trading forecasts. So plenty to talk about.
Yeah. Welcome back, Mike. There's a lot to talk about. It's been a busy time, hasn't it, for many. So I think really, so let's start with some of those updates from the PLCs that were sort of, some of them were delayed, but obviously we as we've come out of lockdown now, they've started to sort of publish them. So starting with Cambria, which highlighted a strong bounce back from June to August, but a slow order take going into September. And obviously they were talking about their concerns over the fourth quarter of the year. But what stood out for yourself with that announcement, Mike?
Yeah, so I mean, Cambria is an interesting one. I mean, don't forget there's different year ends at play here. So Cambria's got a August year end, and clearly they already indicated to the market that they'd had a good first half of the year, which wasn't really impacted by COVID. It appears that they definitely managed cash very well during lockdown, and they've seen a similar bounce back from June, July, probably going into August. However, as you say, the order intake comments that they made about September, has been more cautious relative to others in the sector. I think one thing I probably would say about Cambria, though, is naturally, even before COVID-19, their outlook had typically been a bit more conservative around Brexit and supply constraints and changing powertrain, etc. So they typically are fairly conservative in their guidance and, typically prepare for the worst, really. But, we expect with a half one already kind of, in the bag, we believe the 20 results will be, within 20% of last year anyway. And we think they've been pretty strong on cost initiatives in the business. So I think with all of them, we'll see how September goes. It's clear that there definitely is still pent-up demand. And, perhaps with some brands, hopefully the supply is there to support it.
And I think just on that, I mean, you mentioned the brands there, and we obviously had Mark Lavery on the podcast. I think was it pre-lockdown? I think it was, actually. It's that long ago. But it was.
Can you remember back that far?
Yeah, it seems a long time ago now. But obviously, Mark went through some of his brand portfolio, didn't he? And how long some of the brands do take to develop within the business and things like that. So do you think some of that has a lot to do with sort of brand Cambria's different view of the market? Because they do have a fairly diverse brand portfolio, don't they?
It could be that, and it could also be the maturity of some of the sites. So because they were fairly acquisitive, over the last 12, 18 months. And also, I think it does take time to develop all the banks with high luxury brands. So that could be a factor. But obviously, I think we'll learn a bit more towards the end of November when they report their results.
Yeah, now, as you say, Mike, Cambria were possibly more hawkish than some of the other groups in their commentary about September. And I guess on the flip side, there's been more positive messaging, despite losses coming out of Marshall and Virtue. So what do you make of their most recent updates?
Yeah, I mean, they've definitely been a little bit more upbeat around September. I think, we've seen similar kind of patterns in terms of the bounce back from June. I mean, I guess I'd probably explain this in three phases. The first phase, when we realised, dealerships had to close and couldn't actually trade except for after sales for essential services, I started looking at the operating expenses of some of these businesses and what could the potential cash burn be. And that's pretty scary when you look at the level of fixed costs in these businesses. Now, clearly, the furlough scheme, I think, has helped everybody, and staff costs are typically around 60% of costs. So that's been very useful, to say the least. But I think during lockdown, I'd say every PLC company had kind of managed their kind of cash resources very well. Obviously, there was a lack of fleet activity that helped working capital, but it was clear, when we saw the losses during April and May, they were a lot less than what I first feared. So I think that's testament to kind of, obviously the furlough scheme, but obviously strong operational discipline. And then I think coming out of lockdown, in our last couple of research notes for Virtue and Marshall, we've shown the impact of April and May, and pretty much they probably covered 70-80% plus of losses incurred during April and May. They've recouped that back from June and July from the pent-up demand, and I think both companies have probably been quite proactive in terms of bringing people back quickly from furlough. I know Virtue have invested in marketing, etc. So I think they've done everything they can to make the most of that kind of bounce back in June and July. And ordinarily, we'd expect August to be a loss-making month for most retailers, and it feels anecdotally that actually they've made kind of small profits. So, perhaps going into September, a lot of the losses incurred during April and May have kind of been recouped, which is great news.
And not specifically Marshall and Virtue, but what are you hearing from the groups that you're talking about regarding that pent-up demand for September? Is that a sort of common theme in conversations you're having?
Yeah, I think the pent-up demand we've seen since June definitely took me by surprise. I didn't expect to see some of the kind of monthly profit numbers that Virtue and Marshalls have kind of made, and that's been backed up with other conversations I've had with private dealers across the industry as well. So I think it's been a kind of consistent theme, which is good news. The problem with pent-up demand is obviously, there's just no visibility on how long that lasts, and hopefully we'll see that continue into September, which is a key month, which feels like anecdotally it should do. I hope the supply is there to kind of support it, as I've said, but it's so far so good. I think there is nervousness around the wider UK economy in Q4. And what happens when furlough ends? Do we get mass levels of unemployment or not? We've got to throw Brexit into the mix of that as well. So, so I think we are bracing ourselves for a very uncertain kind of Q4 and into 21.
Yeah, no, I think it's obviously been tagged as sort of pent up demand or revenge buying has been sort of muted a few times as well, hasn't it? But obviously, just before moving on slightly, but Marshalls in the recent days have announced their sort of appointment of two key colleagues to two key positions, haven't they? With Adrian Wallington joining as a commercial development director, Simon Elliott as director of commercial vehicles, and then you've got Caroline Eiling, who's joined as the HR employment lawyer, and then Matt Wilmot, who's head of group legal. So, how's is that a key move for someone like Marshalls as they look to grow their strategy and that, getting those appointments on board?
Solid platform, we think, in the industry, and they've got a strong balance sheet, so they're probably looking ahead at the long term at how to kind of grow the business, and it's been well documented, and I think we all agree that capacity will kind of come out of the industry, and the prize for the well-run bigger PLC kind of dealer groups that can cope with increasing regulation, have got strong values, well-motivated management teams. I think the prize is probably bigger for those companies. So, I suspect Dash is thinking a little bit longer term, and, as ever, will want to improve the platform that he's got so he can take benefit of the prize at the end of this. And he probably sees the opportunity, which is a smart move.
And along that, last weekend with the last podcast, Curtis and I talked about obviously the what's been coming out of the Pendragon recently with the the ditching of the car store brands and its move to replace with a more digitally led used supermarket operation. And their growth plans, I think it's by 2024, is it, or 2025? They've got some significant growth plans. And that's kind of along that same line, that there is opportunities and thinking ahead of what the market may offer them. But what are your thoughts around that and the direction that the group is now going in?
Well, I think the document and the thinking was very, very well put together. And, simply the kind of, anything where they don't have kind of scale or focus, they want to get, they will exit. And equally, they see a large opportunity in kind of used cars. Interestingly, running that kind of business separately from the kind of franchise model. And obviously, I think Bill Berman's got a great experience in the US market. I'm sure he's got a lot of ideas in the how to apply that in the UK market as well. And I think, as we've seen from Kazoo, even, I think people are on different lines of the spectrum in terms of digital and physical presence, but it's pretty clear that you need clicks and bricks really to have an impact in the used car market. And I think everybody acknowledges that. It's just what degree you move towards digital versus physical presence. So I think the Pendragon plan, I think, is looks really good. They've put numbers and targets around it as well, which is great to see. There's a lot of detail behind that plan, and I think they can get there. Even with a kind of envisaged difficult market in 2020 and maybe see a recovery in 22, 23, I think they can get there. But obviously, it's all very well having a kind of great plan and sensible plan, which it certainly is, but execution is always going to be more difficult. So I think Pendragon are on the right lines now, and hopefully they can execute, because it'd be great to see them kind of back in the market as a kind of as a kind of force. And hopefully, I think the industry has been increasing its standards over the last few years, but obviously it's faced kind of many challenges. But I think we'll look back on this for all the businesses and what they've had to cope with during lockdown, and say, they did a very good job coming out of this.
Now, Mike, also restructuring and rebooting, albeit for different reasons, is Lookers. Now, we're still awaiting Lookers' delayed year ends, and it's obviously still undergoing an accounting investigation. Where do you see the group going from here?
Yeah, I mean, obviously, there's been a lot of challenges for Mark Ray-Ban, and which he's walked into really. So monumental challenges really. I think the business has to move on really, and I think in the last trading update from Lookers, let's not forget they've also participated in this market recovery as well. So I think we've got to kind of get the bad news out of the way and then kind of move on. But I think it's clearly they've had challenges, but equally, this has been a very good business in the past, and it probably has lost its way in the last couple of years. But I still firmly believe there's a kind of strong core there, and perhaps with better integration of previous acquisitions, it could be a force in the future. It'll take time, but I think there is a good core to that business in my view.
I mean, in terms of that, and you've kind of touched on some of it there, but what is the city's view on the sector in terms of its ability to deal with trading in the current pandemic and obviously attract investment? I think the Pendragon, I think the city, the shares reacted fairly positive to their announcement of their strategic plans. We know that Lookers are still currently suspended in terms of share price, but we've gone through this, and it's fairly public that the government haven't really focused on the automotive sector uniquely in any way, have they, with any key support. There was the talk of scrappage and things like this, but actually we've come out the other end. I think you've highlighted it earlier. I think the recovery has seen a quicker pent up than many did expect. Just bear me a second. Interruption there. So it's no. It is live. I do apologise.
Yeah, time to wake up, Phil.
Yes, that's it. Alarms are going. But I think what is the city's view on the sector at the minute? What is it? I mean, we've seen the continuing investment, we've seen potential growth coming. What is the view at the minute?
I think the city loves a good recovery story, and I think a lot of investors are kind of waiting to see and the right time. And we've seen kind of the sector in cyclical distress before, in 2008, but the kind of bounce back in share prices was quite severe, on the upside. So investors aren't going to want to miss that. But equally, there has been some bad news from high-profile players. I think people might want to see what's been behind the kind of the look story. Hopefully it can get a clean bill of health moving forward, and maybe there's a bit more confidence going forward. But having said that, I think again the Virtue share price kind of bounced back quite strongly as well on the back of just being able to show investors really what the impact of lockdown was, how sharp the recovery's been, and we can always kind of map out now what we think the full year numbers might be, obviously with a bit of uncertainty. I think investors realise that recovery can be quite sharp and quick here. As ever, they'll want to play it. Timing is everything really in investment, and they'll want to see that most of the kind of the bad news is kind of out of the way. But I think the more the likes of the Virtues, the Marshalls, even the Cambrias, can show that they've coped with these kind of headwinds, then I think that they will get some good support. Equally, again, hate to mention Brexit, but it is such an important dynamic, really, both from a supply and demand side. In the sector, is pretty UK. It is very UK centric. So again, I think we'll have to assess what the impact of Brexit could have. But I think there's no doubt that even without kind of full forecast in the market, we've seen bounce backs in share prices because there's a lot of kind of freehold asset support at the moment, and hopefully as we bring forecast back and just show that severity of the positive bounce back, then I think it will give more people more confidence in the months to come.
Now, Mike, Phil and I have known you for a long time, and whenever we chat, talk inevitably moves on to consolidation and what the trends are. And for as long as I can remember, that trend has been rising. However, after the COVID lockdown, the dealer world looks quite different, with more privately owned groups considering their future and possible exit strategies. So do you see this current situation as being a prompt for accelerated consolidation?
I think we will see more consolidation, but I think people will be waiting for capacity to come out of the market as well. So I wouldn't assume all of the kind of distressed assets will be consolidated. So I think we'll see natural attrition come out of the industry, and then we may well see kind of consolidation at the distressed end of the market, where there's potentially a long-term future with a better parent company. And we have kind of talked about kind of super groups before, and could that happen? And I don't think you can rule that out really, particularly if if you look at some of the brand networks. There's an element of the requirements from the OEMs for investment, etc. Does that require more super groups? So I think we'll see a couple of interesting consolidation angles at either end of the market.
Because the likes of, and we've talked about them, Virtue and Marshalls, they've been quite vocal about their thoughts on acquisitions, and clearly they are looking.
Yeah, I mean, I think they've got a great platform, both companies. They've got strong balance sheets. They've both got leaders with very clear values. They know exactly what they want. And why wouldn't you want to increase and grow the platforms that they've got? Because they've built those businesses themselves, really, and they're going to see a lot of opportunity. So to me, it makes perfect sense expanding what's already a very solid and reliable platform in both cases.
And I mean, we couldn't have you on the show without asking your views on agency model, which was prompted in discussion recently from Marshall Motors CEO Dash Gupta, and he was obviously talking of how much he likes that as a proposition, and how well it works for some of the brands he represents. And then obviously, last week we had Louise Wallace on from the NFDA and outlined last week on some of the show that it was an old model with benefits for both sides, the retail and the OEM. But do you see it coming back into vogue, especially in a recession? And as we move towards an uncertain Brexit, as we've just mentioned before, but could you see this move accelerating?
Well, I mean, I think what I'd say is Dash is clearly a lot closer to the OEMs than I am. And, obviously, I think the agency model, it's easy to kind of generalize about agency models and say, well, is it a loss of control? There's clear that, there is clear kind of working capital benefits of that model. But I think, it wouldn't surprise me to see certain brands want to adopt a kind of agency model, but it'll be done on a kind of brand by brand basis. I mean, and obviously, for me as an analyst, I'd kind of want to see a lot more of the kind of finer detail on what it entails. Obviously, as we said, there's clear cash flow benefits, but if there is a kind of reduction in margin, how much is that? I can see, if the whole industry was to kind of go agency, there might be kind of comments on kind of valuation. What would the margins? What do the margins look like? Are they going to be down even more? And there is sometimes a little bit of sensitivity around the low margin nature of the industry. But what people fail to understand is the margin is part of the structure of the industry, and you can generate good returns on capital off those margins at the right time. So, and what does it mean for kind of competition? Is there less competition? Do you have bigger territory areas? What are the barriers to entry? Particularly with more kind of online kind of startups looking to, is that protected for the dealer? So there's an awful lot of questions. But I think in short, it wouldn't surprise me to see a little bit more kind of agency model activity. But I think it'll be on a kind of brand basis, and obviously it's in the OEM's interest for the network to be diversified and for it to kind of survive. So, financially it would have to work for the dealers. So I realise it's probably quite a long answer, but it is understanding the detail on a kind of brand and network basis, I think, before you'd kind of go back and say it's a good or a bad thing. It's got to work for the dealers and the OEMs, and it's an interesting development, which we'll see how that goes.
Yeah, I don't think we've heard the last of this, and I'm sure it's something we'll be revisiting on a regular basis. Over
a lot of variables, isn't there? There is a lot of variables. Yeah. That's it. I mean, like you say, that impact of margin, and that relationship with the customer, who owns the customer to a certain extent in terms of that data. There's a lot to talk about, and as you say, there's some manufacturers will have appetite to do it, and some manufacturers won't have any appetite to do it at all, because at the end of the day, it's that ownership of the stock and the vehicle and things like this that some will be quite happy for the dealer to take the responsibility and cash flow on rather than them.
I mean, the other advantage, I guess, could just be it would allow the dealers to put more focus into used cars and after sales, where they make more money anyway. So, it's quite complex.
So finally, Mike, any thoughts on how the sector will fare as we sort of go into Q4 and, more importantly, 2021? Just how bumpy a ride do you think this is going to be?
It's never a smooth ride, is it, in this sector? To be honest.
Keeps us all busy, though, Mike. Keeps us busy.
It keeps us all busy. I think the main thing I'm looking for in Q4 is probably the employment market and how big does how great are the kind of unemployment numbers, and I think that might have a kind of a knock-on effect, and it'll give you an idea of potentially the market in 2021. I think the kind of easy part of the recovery has kind of happened now. So I think GDP is back above 70% of pre-COVID kind of levels. And that extra 30% to get it back to where it was is going to be slower and harder, I think. We then obviously got to kind of throw Brexit into the mix as well. And I think we'll be looking at, how does sterling perform through that, because I think that will have a big impact on supply. So, I think during the fourth quarter we'll be keeping a very close eye on sterling and employment levels and general kind of business confidence, really. But equally, I think we'll look back at 2020, for the dealers to have to close in the most important week of the trading year, and for them to have kind of, clawed back a lot of those kind of losses of being shut down. It's not even you're trading through a recession and everything's open. It's, you're shut for 2 months. I think when we look back at those kind of challenges, because I think most people have just kind of got on with it, I think it will give you a bit of confidence for everyone is going to throw challenges up. There is going to be a lot of uncertainty. But look what's been achieved in a kind of quite traumatic year, really. And, for kind of marshals to be virtue, potentially making an okay profit. I think we'll look back and say, actually, these businesses are more resilient than what they've been given credit for. And, for the balance sheet damage of being shut for a couple of months, potentially being not nearly as bad as expected. Again, I think that kind of should give us confidence going into 21, but I think we need to expect kind of further challenges, and as you say, UK economy, I think next year is, I think the easy bit of the recovery is being done. I think going into next year, it's any further recovery is going to be hard won, and let's see what Brexit brings as well. So it's never going to be easy.
No, I mean, thanks, Mike, for all that. Just for me, I think, like I say, I mean, there's a lot of talk on Q4. A lot of the challenges there, as you say, at the end of furlough there. But I think, we said it before that I think the market recovered quicker than many probably anticipated. I think the sector has truly shown its resilience and ability to, get back up and running and get business done. And I think, from a used wholesale perspective, that's still a strong market at the minute, as we've been talking about, and the values are still holding strong. There is a supply and demand imbalance potentially at the minute, but again, a lot of that will be focused on Q4, and then, as you say, Brexit is the key one now around what the impact will be as we go into 2021 in terms of supply and tariff impacts and things like this. So, it's going to be an interesting time. And, as you said before, with the latest from Pendragon, the growth indicated from both Marshalls and Virtue, most recently, is it a smaller market that these guys are going to be going after? That's some of the key with this. If the new car market does drop and has a direct impact on used supply, then the market is a smaller pot to go for, with some bigger operators. So there's so many variables that could hit us.
Yeah, absolutely.
Well, many thanks for joining us today, Mike. Great to have you on the show, and you're welcome back anytime. That's
always
all.
A pleasure.
Yeah, no, it's great to have you on. Many thanks. That's all for now. You've been listening to this special Motor Trade Radio podcast brought to you in association with eBay Motors Group. Please like and share on social media, as it's important during these times for the dealer community to work together and share experiences and best practices. Many thanks to you for listening and supporting the podcast. Philip and I will be back with the industry headlines on Saturday. Until then, stay safe and stay well.